Yeah, how's it going, everybody? Welcome back to the channel. Welcome to the channel. What is up? Yes, thank you for joining me. If you're new here, well, what's up? My name's Darren. I mostly talk about money, mostly stock related stuff, to be completely honest. So if that interests you, go ahead, hit that subscribe button, like this video, share it, comment, all that good stuff. Love to hear from you. And if you're a returning subscriber, thank you. I appreciate you. You the best. All right, anyways, what's this video about? So this is kind of more of a basic video. It's earnings versus EPS. What are they? What do they mean? All that blah, blah, blah. So let's dive into it a little bit. Why is this important? Okay, so basically, for a little bit of context, companies report earnings every 3 months. So basically, quarter one, quarter two, quarter three, quarter four. Think of it like basketball if you watch basketball. There's 4 quarters in a month. Why is there 4 quarters in a month? Well, because there's 12 months, break it up into 4, and it makes 3 months each. Pretty simple. So Q1 just stands for quarter one. So basically the first 3 months of the year. Q2 stands for quarter two, the next 3 months, and so on and so forth. That's pretty much how it works. So every 3 months, companies will report earnings and they'll report EPS. What's the difference? Why are they important? Why should you pay attention to them? Which one's more important? All very, very good questions that I will answer. All right, so let's get into it a little bit. First off, we got earnings. So earnings are pretty simple. Well, basically, it's how much a company earns, the total number. So if they earned $1 billion that quarter, $100 billion that quarter, $10 million that quarter, whatever. It doesn't matter. It's just that's their earnings, how much they earned. So basically, they'll report it every quarter. So they're reported every quarter, which is every 3 months, all right? And it's pretty much just the money. So just the money they made. That's pretty much all earnings are. It's very simple. It's just how much money they earned, how much products they sold, how much business they were able to do. That is just the total number that they earned. It is their earnings, the money they made. Like when you go to work and you get a paycheck, how much money is there? That's your earnings. That's the same thing with them. It's their pay stub, basically their annual report. It's their T4 every 3 months, however much money they make, all that stuff. It's just how much money they earned. Super simple. The more complicated one is EPS. So let's get into EPS. So we got EPS. Okay, so EPS, what does it stand for? The $1 million question. It stands for earnings per share. Earnings per share. What does that mean? What the hell does earnings per share mean? Basically, it's how much money a company earns per number of shares it has. Pretty straightforward, actually. So basically, if a company has like 1 million shares out there or something like that, and it earned $1 million, its EPS is 1. So for every share, it earns $1. Pretty simple way to look at it, and that's pretty much the most straightforward way. Now, there is a way to calculate it, and that way is, so pretty much the EPS equals, a little bit of math coming in here for anyone who's honestly really scared. Don't worry, it's simple and you'll probably never have to calculate this. You can pretty much just go online and search up the EPS and it'll tell you. But in case you want to do it yourself, this is how you do it. So the EPS is equal to the net income over the average shares outstanding is pretty much the easiest way. So also it could be net income minus dividends if it pays a dividend. All right, so that's only if it pays a dividend. Then you have to technically take the net income minus the dividend and then divide it by the average shares outstanding, and that's your EPS. But realistically, you'll probably never have to do this just because like you can go on Google, like we have the internet. It is quite easy. You just Google a company, and every time it reports earnings, it reports EPS. So it's quite simple. You may only have to do this for a really small company. Even then, realistically, if it's listed, you'll probably find the EPS online. So that's pretty much it. So it's pretty simple. Earnings are basically just how much money a company earns. It's straight up simple. Like that one's just how much money it earned. If it earned $1 million, that's how much money it earned. It earned $1 million. EPS is a little bit more complicated. Realistically, you'll get anywhere from minus, which is not good. If you see a minus, that means, well, it lost money. So preferably a plus EPS, like say at least a cent. That is really bad though. So you probably want something along the lines of at least, $1, $2. Again, it varies a lot, so it's kind of hard to say what's in a good range. I mean, technically, the higher the number, the much better, right? You want a high EPS because you want a company to earn a lot of money per number of shares it has. Now, here's something interesting. Which one's more important, earnings or EPS? By far, to me. Now, some people may disagree with me, but I think I have a very valid point on why I believe this one is better than the other. And the winner is earnings. Why is earnings the clear winner to me? You can't really fake earnings, all right? You can kind of fake EPS. What does that mean? How can you fake it? So earnings just goes like the amount of money you made. At the end of the day, it's how much product you sold, services, whatever. It doesn't matter. Whatever your company is, if it's Apple, and Apple's a good example for this. So Apple's earnings are more important than their EPS. And this is a big reason. Earnings, that goes like how much iPhones they sold, App Store, downloads, iPads, MacBooks, AirPods, all that crap, right? How much stuff they sold is their earnings. Their EPS though, their EPS is normally pretty good. Why is it good too? It's because they have something called buybacks. Buybacks are super important when speaking about EPS. What are buybacks? It says it a little bit in the name, but basically Apple chooses to buy back their stock. And Apple is actually the biggest buyer of their own stock, okay? So why does this matter? Well, if there's less shares on the open market, it means your EPS number is better because there's less shares to put it against. Like I gave the example, if there's 1 million shares and you earned $1 million, you earn $1 per share. Now, imagine if there's only 500,000 shares. Well, then your EPS is now $2, right? Because now you've taken out half of the shares. So now your EPS doubled, even though your earnings are still the exact same. So they kind of, in a sense, cheat. It's not really cheating in a sense. It's allowed, right? So it's just using your money to your advantage, and Apple has a lot of money, a lot less than they used to, but still a lot of money. And they have less mostly because they're doing buybacks, helping their EPS. So at the end of the day, EPS can be faked. So you have to look into this a little bit. And again, not necessarily fake, just inflated is a better word, I guess I should say. It can be inflated, meaning they can make it look better, right? At the end of the day, if they're buying a ton of stock back, they have less shares in the open market, meaning there's just less shares to divide by. At the end of the day, buybacks are good. I'm gonna make a video about buybacks and all that stuff, but it's mostly good if you're like Warren Buffett and you own a large chunk of Apple shares, then it's super helpful to you. It's amazing because now they're buying back their stock and your position just keeps growing bigger and bigger without even buying a stock. That's pretty damn amazing if you ask me, and that's one of the good things about investing in a company that has a lot of money, does buybacks, all that stuff. But anyways, that's pretty much it. Let me know if you have any questions, comments, stuff like that. Comment that stuff down below. Love to hear it, reply to it, like it, favorite it, all that stuff. Share this video. It's pretty simple, it's pretty basic. At the end of the day, if you have any questions, comment them down below. I'll be happy to answer them, happy to help you out, happy to help you on your investing journey. Hopefully this video was helpful and informative. If it was, always remember to hit that like button, subscribe, comment, all that good stuff. You know the drill, basically. I don't want to bore you to death with that, all that good stuff. Anyways, thank you for watching. Appreciate you. You the man, you the woman, you the person. You amazing. And have an amazing, beautiful, life-changing, one-of-a-kind day, and I'll see you beautiful people next time.